It's Brian Preston, the money guy.
All right, so if HSAs are my favorite type of account, my second favorite would probably be Roth IRAs. And this next question is from Rob. Rob says, should I max out my Roth IRA? I'm currently doing $300 a month before I max my Roth 401k. I just started this year with my company. I feel that my Roth has much better investment options available. I feel like we get this question all the time, Brian. Should I do Roth 401k or should I do Roth IRA? Which is better? What's the difference and why does it matter?
Well, obviously there's variables that come into play. I'm going to stereotype and say that I would prioritize Roth IRA over Roth 401k first. And that's why even if you look at our financial order of operations, you'll notice that Roth IRA is kind of that step 5 because here's the thing. Roth IRAs, you get to choose all the variables that come into play. You know, there's no excuse for how your Roth IRA is set up because you chose it. I mean, you got to go say, hey, who do I want to work with for my Roth IRAs? I'm going to work with a low-cost custodian like a Fidelity Investments or Charles Schwab or Vanguard. You know, there's a lot of control on, because then now that puts you as really the field general of how do I invest the money? You know, low cost, you can do index funds. How much is the annual cost? And then what's the access points in case I needed to get to this money at some point? If you go look at your Roth 401k, now there's a chance you work for a big Fortune 500 company and they have an outstanding 401k and your Roth is actually buying, your Roth 401k is buying into those exact same
low-cost index
low-cost things, maybe at a Vanguard or a Fidelity or a Charles Schwab. But there's also a chance that your 401k might be the college roommate or the golf buddy of the owner or the boss, the decision maker at your employer, and that it's just not going to be as good of a plan. You know, if it's an insurance sub account where you know they got a lot of fees in there and commissions and other things, it's just and you still might use this account. Because you got to love the one you're with because the tax benefits, the matching contributions are so valuable, but it's just not maximized or made as efficient as possible as when the buck stops at you on that Roth IRA, that you control your destiny completely. And because of those variables, I put the Roth IRA first. Now there's a caveat. Income. Bo, you want to walk them through because once your income. I mean, because
I was thinking about something else.
Not everybody can do a Roth IRA.
That's exactly right. They put limits on it. Once you make over a certain income, they say, hey, you can't even do Roth IRAs anymore. We won't even let you contribute once you make over, oh gosh, I'm a butcher. It's like 140 single, like 200 married, somewhere in that ballpark, I think. Does that sound right?
Yeah,
I
it's
think
close.
That sounds right.
It's
Somewhere
close.
in that ballpark.
I'm so old, I still remember when those numbers were much lower. So since they're indexed for inflation, I'm always careful when I don't have my cheat sheet here.
But the beautiful thing about Roth 401ks, no income limit. So even if you make $1 million a year and you have access to a Roth 401k, you can still choose to put your dollars in the Roth bucket. Now, if you make $1 million a year, you may not want to because you're foregoing a really good tax benefit, but you can still do that. So for some folks, maybe you can't do backdoor Roths. Maybe Roth 401k is the only option you have for building tax-free dollars, and in your specific circumstance, it makes sense to do so. There's two other reasons I think the Roth IRA edges out the Roth 401k. Here's the first one, and we hate this one, but it's a fact. Roth IRAs can serve as an things went bad, emergency piggy bank.
Great point.
When you put money into a Roth, you can always get access to your contributions, your basis, tax-free and penalty-free if you need to. Once your money goes into a 401k, if you're still employed and working there, unless they allow loans or hardship withdrawals, it's hard to go get that money back. So Roth IRAs do serve as this like extra, only break the glass in case of emergency piggy bank. That's the first one. Here's the other thing that a lot of people don't recognize. We know that 401ks, when you get older, and IRAs are subject to required minimum distributions. When you hit age 72, you have to start pulling money out of those. Well, one of the beautiful things about Roth IRAs is that they are not subject to RMDs. Government does not make you start pulling money out of those at age 72. A little known fact is that Roth 401ks are subject to RMD. So if you've retired and maybe you had a Fidelity, had a Vanguard, and you just left your money behind there at age 72, if you've not rolled it into a Roth IRA, you're going to have to start taking distributions from that account. So Roth IRAs are a little bit better from a tax planning standpoint in terms of building legacy and passing assets on to your heirs.
Great points, Bo. Solid drop-ins. I love that's why we're a good team.